Welcome back to the channel. We're going over the SP 500, the Nasdaq 100. What is happening with stocks? How are we moving? How should you be looking at the market going into tomorrow with the very big news we have coming into it? I'm going to tell you exactly how I'm trading it and exactly how I'm watching this. Now, before we get into all that content, what I will say is that I have to recommend that you subscribe to the channel and like the video if you will. It helps out the channel tremendously. Also, I'm posting videos almost every single day regarding the market, the news you need to know, and how you should be looking at this market going into each day. Let's get to it. Now, going into yesterday, I was pretty bearish going into today. I'm going to go over exactly why and exactly how we looked. Now, we had a few bits of information, but I want to point something out. So basically, this right here is going to point out yesterday's price action from here basically to right here. That's going to be the whole day. Okay. Now, basically going into yesterday, you had an initial dip, you bounced. Going into roughly lunch, you kind of peaked, and then you started that slide all the way back down into the end of the day. Now, what happened today? Let's explain. Now, first, we had to mention going into today specifically, and what I'm going to do is go to the 5 minute to give you a better overall look. And what we were doing, and this is where you represent the day starting, was right here. Now, I said a few things going into today specifically. Now, going into today, what were we looking at? We had PPI data coming out, and we actually had okay data. So if you come from this, you had a very flat opening, soft data pull here, about break even on all these. You actually had it sliding down on some of the other days as well, but the month over month, so the actual increase month over month came out flat at expectations. So there's no real surprise there. I said from that, most likely what would happen is you probably get a bounce from that data. We come back here, you can see this right here is yesterday's close. You actually opened up the day kind of strong, came back down, and then you hit your high of the day around 377, 378. Now, from there, what happened and how were we trading overall? This is where things got interesting to me. Now, if you're looking at this trend, yes, it's going to be an overall bad trend line. It was kind of just a rough mock drawing so everyone could see. But what I want to point out is on the day, is you were continuously sliding, and this was concerning with how we were looking. In Discord, a lot of the talk was about getting a bounce and you know, kind of moving up into the Fed meeting tomorrow and how we were kind of adjusting. But I stuck with the overall census that we were bearish, and it was, if anything, you had to trade the downside on these moves to the upside. And it looks shockingly similar to yesterday's action, right? So looking at yesterday's action, you were holding that local low, and then you were trending down since lunch. What happened here? Basically, since this morning, you were trending down and you were holding this local bottom around 373, the high 372s. If you go to the Nasdaq, you can see it as well, continuously moving. Then you got around lunch, you got this move in this little number right here, which in my opinion was a clear-cut bull trap. Instant move to the upside followed by instant down pressure right back down. And from there, you broke the lows and you tried to push down. And then end of the day, you had a little bit of buying kicking in the last 20 minutes of the trading day. Now, going to the Nasdaq, it's going to paint this picture a little bit more clearly with how you see you moving right here. Now, on the Nasdaq, you really held this firm bottom here. Come down, you can actually see that low right there. You can see how well you held it in kind of the downtrend that you were in all day. So looking at the market today, you got that move up you wanted. However, the census is still very bearish. Now, I want to highlight too is tomorrow you're getting a lot of talk about a 50-point hike. This is something I think people need to be talking about and something that is very concerning. Because if we open this up, this is from Fast Stock Market News from the Bloomberg Terminal. And these are essentially what everyone's kind of throwing their guess out for the rate hike decision. So Barclays, Deutsche Bank, Goldman, JP Morgan, a lot of these bigger guys are suggesting it's highly likely to get a 75-point hike, while you have about 40% of these people saying you're going to get a 50 BPS. That's the census right now. Now, what I'll say about this and what I said yesterday is you're going to see a bounce if you get a 50 BPS hike. So let's just highlight this right now. Going into tomorrow, we're going to just look at SPY to give you the best example possible. And we're just going to delete this as well. So going into tomorrow, it's the same census, same viewpoint that I gave you guys yesterday. That let's say the overall bottom was around 368, 365, whatever that may be, right? So no matter what, how you trend tomorrow. So let's say hypothetically you come down, to this range tomorrow, and then right here represents where you're actually going to get that data, just an overall timestamp, right? If you get a 50 BPS here, you will bounce. 1,000%, you're going to bounce. If you get anything over a 50 BPS, you will start to tank, and it's going to be bad. It's going to be very, very bad. Now, people are going to be asking in the comments below, what are my opinions on this rate hike? How do I see us moving? I see us coming out with a 50-point hike. I don't see a 50 BPS coming. However, what I want to say and what I said yesterday is you're going to get an instant bounce with the 50-point hike. However, the comments and how they talk about this rate decision will greatly affect the way stocks move. So you could get that 50-point hike. The initial reaction would be upside, correct? And no matter what, we expect upside, even if you start pushing up tomorrow. So let's say hypothetically, you push up to this range tomorrow going into the rate or the meeting, the Fed meeting. You push up, you hit here. If a 50-point hike hits here, you will still bounce up. No matter what, wherever you're at, 50-point hike, you will go up. Now, coming into the press conference, the questions and everything like that, that's where this starts to get sticky, where the questions start to arise. The Fed is going to have to come out here, and they are going to have to start addressing what is happening in our current economy. Now, we know inflation is going crazy. We know this is a very big issue. You're going to have consumer spending coming out early in the morning as well, which will help the economy in either direction if it comes out strong. That will help you push up going into the Fed meeting. But you're going to have the Fed having to answer hard questions because we've been blaming it on, gas. We've been blaming it on Russia. We've been saying inflation's dying down. But guess what? It's really hitting us now. This is really big. Everything's hitting us, and things aren't cooling off. Inflation's actually only going up. Home sales are slowing. Mortgage rates are now at 6.2% overall. If you go over to Mortgage News Daily, you can see this right here. You're sitting at 6.28% right now for the average mortgage rate right now in America. Again, going back down to January, you were sitting at 3.29. You've doubled already. So looking at what's happening, these are all reasons for the Fed to start getting alarmed. And they actually said in the last meeting that the key thing for a dangerous economy or a recession would be to slow down on homes. So that's the concern there. So right now we're coming out with a 0.5 expected hike on investing.com. If this comes any higher than 1.5, again, that's very bad for the economy. Then again, that press conference after this will be huge in showing you the direction we're actually going to start moving based on the Fed's take. Because yes, you can get a 50 BPS hike. However, just because they're going a little bit more, conservative with those hikes, they can still come out and say, look, this is bad. Inflation's hitting us. Things are not going as expected. Any type of tone with that will be hawkish for the economy and will definitely lead to risk-off environment in the economy, which means further downside and slippage going down. That's going to be the detrimental part. Again, looking here, I want to highlight the 10-year yield very quickly for you guys because it's staying inverted now. This is what I was talking about. I tried to tell everyone, looking at this 10-year yield, you're actually going up even further. You're at 1.014% now. You've gone up even higher than yesterday. You're not cooling off. It's just getting worse and worse progressively. Again, the last time you saw this wasn't even during the 2008 bubble. Nope. This was at housing and the .com bubble crash back here in 2000. This is theoretically worse than the housing bubble right now because you are still trending up. This is very much in the same caliber as the .com bubble, which was arguably worse than the housing bubble crash. So you need to be looking at what's happening here. Yields are going rapid. They're going rampant. They're going absolutely nuts right now. And everyone's kind of talking about this 10-year yield thing now. If we go over to junk bonds, you can see those proceeded to slip down today as well. Treasury bonds also getting hammered, now pushing down to that next zone around 100 flat. And then again, we're targeting around the $90 range after that. So you're continuously getting all this bad news, bad pressure. Bitcoin, we mentioned it yesterday. Where do we see it was going? 21K. What happened going into today with Bitcoin? You ended up hitting lows at night right below 21K. So you're further dipping, further sliding on from an economic standpoint. Things look absolutely atrocious. So when I'm looking at this, I have to go into this Fed meeting. I'm listening very closely to see the trend that is set. And a lot of people are going to be asking me, am I in positions going into tomorrow? I'm not even going to show you stocks that I'm interested in right now because I'm so concerned. And people that are saying, Tyler, well, how should I be trading this or that? What I want to highlight for you very quickly before I let you out of here is going to the interest rate decision. So the last decision that we had, let's just overall show you what's going on. The last decision that we had was May 4th. And let's go back to May 4th here on the SPY so you can see the trend that was set from that day. So if we go all the way back here, this represents the May 4th hike that you had. Okay, going into May 4th, what happened? You absolutely pumped when you got that news, and then guess what happened? The next day, you started ranging back down. You went from 430 all the way to the lows of locally 380 before you got a strong bounce. We can even go as much as to say it was 385 before you came back down. This was that one pump you got. So from that day, from the interest rate decision, which they marked up to a 50 BPS hike, what happened? Boom, you got killed. You got shot all the way back down. What am I saying here? You are getting a clear trend set every time you get an interest rate decision. So if you're going into this saying, I got to get in before, first, you never know what's going to happen. You never know what they're going to say. They've already been proven to lie to everyone, the American people, etc. We already know they'll do whatever they want. They'll lie, they'll manipulate, it doesn't matter. But if it comes out as a bearish viewpoint of 75 or whatever it may be, and they talk very hawkish on the economy, in my opinion, you were fine to wait until tomorrow before getting into any puts or anything like that. Why? Because if we look back at this trend, last time this happened, you pushed up to 430 for absolutely no reason, and then boom, you collapsed all the way down to 385. You can continue this same trend and going back and back and back to see how this is happening. If you go back to the one before this, down at March 16th, what happened on March 16th? These answers and questions are pretty rhetorical because I actually know what's happening in all these days if you've been following me. March 16th, right here, you had a very big dip going into it, and then boom, you shot up and you actually trended for 2 weeks to the upside of 462 from the lows of locally 425. The point of the story here is wait for the news to be out and then start trading the trend that you get established in, because every single time we have this decision, guess what happens? You get a new trend to either side, and that's the way you need to be trading, is following the trend.